Welcome back. Thank you so much for joining me in today's video because I have an update for you guys regarding home prices, housing inventory, pending home sales, and much, much more based on a brand new report from Redfin just posted today, which is on April 4th. Can't believe it's already April. Anyways, thank you so much for joining me. Let's begin today's video. I don't want to waste your time. It says the growth rate in new listings, this is the amount of people who are deciding to list their houses for sale, slowed this week as some sellers pressed the pause button over the Easter holiday. Housing costs remain stubbornly high, deterring some home buyers. But according to Redfin's economists, housing costs could come down soon. I'll touch on that here in a little bit. But what's wild is that prices on existing houses are much, much different compared to brand new home construction. New home construction down 8%. Whereas existing houses, based on this report, up by 5% year over year. Also, the number of new listings in the United States for houses for sale rose by 8.4% from a year earlier during the 4 weeks ended March 31st, the smallest increase in about 7 weeks. If you guys want to see home prices absolutely tank, you want to see the graph of new listings skyrocketing and also active listings or housing inventory also skyrocketing as well, which will of course put downward pressure on home prices. However, over the past 4 weeks, the smallest increase in about 7 weeks. However, this is due to, or could be due to the fact that we have the Easter holiday over this time period, which fell 1 week earlier this year compared to last year. So comparing year-over-year numbers or year-over-year changes, a little bit different because of the holiday this year. So what they're basically saying here is that this is potentially an Easter blip, but they'll keep an eye on the data in the coming weeks and months ahead. In regards to that's the supply side. Let's have a look at the buyer side. That is pending home sales, a measure of contracts being signed between buyers and sellers. When you write an offer, get your offer accepted, that is a pending home sale. That decreased by 2.8% from 12 months ago. And pendings posted an unseasonal decrease during the last week of March as well. Some would-be home buyers took a break during the holiday season and also due to high housing costs as well, very close to all-time record highs for housing payments. So what about home prices? And Redfin actually got it right this time. In previous reports, they talked about how we're very close to all-time record highs for for housing payments due to the rise in rates. But the data tells a different story though, because this is really due to the rise in home prices and not rates. And Redfin got it right this week. The median U.S. home sale price was $376,000, up 4.7% from 1 year ago. And monthly housing payments were only $13 per month shy of the all-time record high that was set back in October last year. And that was when prices were lower, but mortgage rates were nearing 8% versus 7% this year, or this week. So again, we're very close to all-time record lows for housing affordability because your average monthly housing payment is only $13 shy per month compared to the record highs we saw back in October last year. And let me just kind of explain this because let me just share some graphics here. Let's look at asking prices from October last year compared to what we're seeing right now. For example, back in October last year, the median asking price, these are houses listed for sale, the median asking price at $375,000. Now it's at $405,000, an increase of about $30,000 ever since October. And that is the main reasons why we're very close to all-time record lows for housing affordability. On top of that, it is not due to the fact that rates have been increasing. In fact, rates have decreased by about 1 percentage point ever since October last year. So back in the week ended October 26th, this is according to our good Uncle Fred, and the source here is Freddie Mac. So back then, the average rate was around 7.8% for a 30-year fix for people with great credit. But last week, or the previous week, based on data from Redfin, it was at 6.8%. So rates decreased by about 1 percentage point, but that's not really helping out home buyers so much right now due to the surge in prices, up by about 5% year over year and much higher compared to October last year as well. However, there may be some good news ahead for would-be home buyers, and this is because rates could potentially fall in the coming months based on incoming data. And then Redfin's research lead kind of touches on this as well. She says daily average rates rose this week because of some disappointing economic news. But if the upcoming job and inflation shows that the economy is heading in the right direction, the Fed is likely to confirm they will cut interest rates in June, which would lower mortgage rates. So what does it mean by heading in the right direction? This means in the eyes of the Fed, what the Fed wants to see is for the jobs report to show that job growth is slowing down, because if more people are losing their jobs, they have less money to spend, and that decreases inflation. So if we see the jobs report become a little bit slower, on top of that, if we see inflation going down, that will likely decrease mortgage rates in the near term. All right, let's change gears again here and talk about what's happening right now with prices, inventory, and much, much more. One thing I'm not going to touch on is this right here. This is leading indications of home buying demand. I made an entirely separate video in my previous video, so if you guys missed that, take a look at that. Let's first have a look at this right here. So this report here covers the 4 weeks ended March 31st, so more or less March for the month. It covers 400 plus US metros, and Redfin data goes back through 2015. Let's first talk about prices. The median sold price, again, $376,000, up by 4.7% year over year. Asking prices up by 4.9%. And this median monthly mortgage payment is based on this asking price, $405,000, at the 6.79% average 30-year fixed rate. That was the weekly rate according to Freddie Mac last week at 6.79%. So your average monthly housing payments increasing by 9.3% year over year, and only $13 per month shy at the record highs set back in October last year. Let's take a look at home prices according to Redfin's data center. So the median sold price, this by the way is existing houses excluding brand new home construction, is up by 5%. It has been paid at a 5% year-over-year increase for the majority of the year, by the way. But in 2022, prices were rising faster and also were more or less in line with the gains we saw in 2023 right now. Also, something that caught my attention as well is that $376,000 were not too far off the all-time record highs at $383,000 that was set back in June of 2022. So please leave me a comment below. Do you guys think we're going to get to all-time record highs for home prices this summer, or will it be below that? Please leave me a comment below. In my personal opinion, that will depend on the direction of rates as well as inventory levels as well. Redfin also posted this as well. They look at the 50 most populous US metros to see how they fared regarding pending home sales, new listings, and home sold prices. So only one metro decreased year over year. This is exactly the same as last week. So San Antonio, Texas, decreasing by 0.3%. Last week, it was also the only metro down year over year as well. So 49 of the 50 are up. In fact, at the top 5, all increasing by 14% or more. So leading the nation is West Palm Beach, Florida, rising by 19.1%. Then we have Anaheim, San Jose, Providence, Rhode Island, and Miami, Florida. Again, what's pretty shocking regarding San Jose and Anaheim, the median sold price there for each of those cities, over $1 million. I believe San Jose is around $1.5 million. So staggering to see that prices there increased by about 16%. In fact, let's look at Redfin's data center for San Jose. In fact, it's actually at $1.6 million. The previous period at around $1.57 million. So at $1.6 million, just crazy. Back in this time in 2023, only $1.4 million. But absolutely wild to see that prices are absolutely skyrocketing in San Jose, California. Let's look at inventory there as well. So inventory over the past 4 years, yeah, look at that. It's only up by 1.5% year over year, but lower than 2022 and also in 2021 as well. And this, by the way, is much different compared to the national average. Right now, we have more houses for sale right now compared to the same time frame over the past several years. So at least a 4-year high. All right, let's get back to Redfin's report. Let's talk about pending sales, the number of newly listed houses, and also housing inventory. So on the demand side, pending sales decreased by 2.8% year over year. This is pretty fairly big change compared to the previous period because in the report from 1 week ago, pending sales decreased by 0.7%. Now it's down by 2.8%. Also, the number of new listings rose by 8.4%, which is not as high compared to the 14% gain we saw in the previous period. Active listings or housing supply rose by 6.9%, down slightly from last week, an unseasonal decrease, which could be, again, all these factors here could be impacted by the Easter holiday weekend. Also, the month supply is at 3.3 months, up slightly from 1 year ago. What this number really means is that at the current sales pace, if no new listings were to hit the market, in other words, new listings stopped altogether, at the current sales pace for all the houses for sale during this time frame, they would be sold in 3.3 months. And at 3.3 months, this more or less implies we have a seller's market in which sellers still have an advantage over home buyers right now. Let's also take a look at how each of the 50 most populous metros fared regarding pending sales and new listings. So pending sales increased in 16 of the 50 metros. Of course, this means that there's 34 that decrease year over year. The biggest increases of pending sales, not surprisingly, San Jose, California surged by 31%, and prices there increased by 15.9%. After that, we have San Francisco, California, Anaheim, Seattle, and Milwaukee. Pretty interesting here that the top 3 markets all located in California. In contrast, Atlanta, Georgia saw the biggest decrease of pendings, down by 16%. Then we have West Palm Beach, Florida, Houston, San Antonio, Texas, and Fort Lauderdale. In regards to new listings decreased year over year in 13 metros, therefore 37 increased though. The biggest increase, San Jose, California, 41.3% gain, far above other metros here. After that, we have Phoenix, Sacramento, where I live and work as a real estate agent here in Sacramento, and Jacksonville, Florida, up by 24%. Austin, Texas, surging by 21% as well. In contrast, Atlanta, Georgia led the nation in the biggest decrease of pending sales, but also new listings as well. After that, we have New York, New Jersey, Boston, Chicago, and Milwaukee, Wisconsin. When looking at Redfin's data center regarding new listings over the past 4 years, which goes back to 2021, which by the way, I really wish they shared data through 2019 at least, but it is what it is. I will share though, according to Realtor.com, active listings or housing inventory compared to pre-COVID levels as well though in today's video. So new listings decreased or increased by 8.4% compared to the 14% rise from 1 week ago. So we're above levels in 2023, but still below levels in 2022 as well as 2021. So new listings increasing, but not as much as the previous week. In regards to pending sales, that also decreased as well, down 2.8%, at least a 3-year low during the same time frame, much lower compared to 22 and 21. In regards to active listings or housing supply, that also decreased as well, which again could be due to the fact we had the Easter holiday weekend because new listings were decreasing. Active listings up by about 7% year over year, and also at least a 3-year high during the same time frame. So for example, back in 2022 this time, there's around 640,000 homes for sale. Now there's approximately 812,000. If you guys are a home buyer, this is good news because you want to see more options to choose from. So it's really good to see this, but we really want to see is this right here, inventory absolutely skyrocketing like it did in 2022. And that will soften home prices. So I'll definitely keep you posted with the latest developments, because if inventory starts rising like it did in 2022, I don't expect that to happen. That will likely cause home prices to fall as well. And again, a friendly reminder, the reason why inventory levels absolutely skyrocketed in 2022 is because rates more or less doubled in less than 1 year. That really shocked the housing market. It really caused home sellers to put the brakes on listing their houses for sale. But more importantly, it also caused a huge decrease of sales because home buyers were waiting on the sidelines because of rates increasing so much in a short period of time. And that's one of the main reasons why inventory skyrocketed in the summer months of 2022. This year, quite a bit different because rates overall, let's just look at this. Rates overall this year haven't really changed a whole lot. In fact, ever since really, when was this? January 4th, we're at 6.6%. Now, for the week ended April 4th, 6.8%. Much different compared to the giant surge in 2022. I mean, look at this. January, what was this? January 6th, 2022, 3.22%. By the time we hit June, we're at 5.78%. And then by the time we hit, when was this? October, we're at 7.08%. So rates more or less doubled, actually more than doubled in less than 12 months, which shocked the housing market in 2022. Obviously, different dynamics impacting our housing market this year compared to last year. I'm not saying don't have our challenges right now. I think the biggest challenge right now is housing affordability due to high home prices and, of course, elevated rates as well. All right, let's get back to Redfin's report. Here's a chart showing the month supply at 3.3 months, at least a 3-year high as well. So for example, back in 2022, again, the month supply was more or less at all-time record lows at around 1.8 months. Now it's at 3.3 months. What else do we want to share with you guys? Days in the market. This is a time frame when you list your house for sale until you accept an offer from a home buyer. That's days in the market. 39 days right now, slightly faster compared to last year, which is in orange, but slower compared to 2022 or 21 and 2022. Back then, houses sold in about 25 days. Now it's at 39 days. Yet another metric that is at least a 3-year high is the share of price reductions at 5.6%, higher than last year at this time at around 4.4%. And of course, much higher compared to the previous 2 years. Lastly, here's a look at the average sale price to final list price ratio. We have been seeing a seasonal uptick like we do each and every year, but at 99% for the houses that sold over the previous 4 weeks, this means they sold on average for 1% below the seller's final list price. This is higher compared to last year, but much lower compared to 2021 as well as 2022, when back then houses sold for just under 2% over the seller's asking price. And with that said, please comment below your biggest takeaways from today's video. Also, if you guys want a real estate agent referral, check out my website, realestateteamfinder.com. Or if you guys want to buy or sell a house in the greater Sacramento area, please email me at jason@meetjasonwalter.com. My team and I would love to help you. With that said, I appreciate you guys watching today's video. Have an awesome day, and we'll see you in the next video.